Good morning, traders. This is Matt with Newbie-Trader.com and want to welcome you to our weekly gap wrap for week ending January 7th, 2017. Happy New Year to everyone. Hope you had a great start to your week. Now, this week was a shortened week. Monday obviously wasn't a trading day for us, but we did get 4 great days in. And just to talk a little bit about the big picture of our high probability gap opportunities this week, we had a total of 12 opportunities between our 4 markets, and of those 12 we ended up hitting 11 of the markets that opened in their high probability gap range actually filled their half gap, and that ended up being about a 92% fill rate, and the full gap, 67% of those filled. So the full gap, there was only 9 out of the 12 that were filled. But again, we look for that high probability trade, and we'll just step through each market. So let's start off with crude. The 4 markets that we watch this on in our trading room each day is crude, gold, the S&P, and the Dow. And those are also the 4 markets we typically apply our ultimate fractal tool. And at the end of today, we'll go ahead and review the trade setups for the fractal tool on the ES for Friday. So starting off here with crude oil. For those of you that are new to this tool or new to this system, what I want to explain, what we have here on the left hand side of the chart of each day, you see a little green vertical box. If the market opens up inside that vertical box, there's over a 90% chance that we're going to fill that half gap. And the green line signifies the open, the red line signifies the prior day's close, and this orange line here is the half gap for each one of these markets respectively. Now also on this chart, you'll see what we call our pivot levels, and these are levels that our members get each day prior to the market open, and we basically have this tan color line, or khaki if you want. That's kind of like the daily pivot, and we provide 3 markets above, or 3 levels above the market in red, which will act as resistance, and 3 levels below, which we mark as green, which act as a support. But like any support resistance, once the market moves through those levels, then you look for the market to come back and use that level to be, for instance, if it was support and it moves through it, that then becomes resistance. So that's what you're looking at here. This is a 5-minute chart looking at the entire week, and you can see from crude here, we opened up high and made a couple bounces off its opening price, and then the market just fell hard on crude that first day. The move through the pivot was very quick. This would not be considered a gap trade type day. The open was outside of our initial vertical green box, so we wouldn't consider it a high probability trade. A lot of times when you get a big open like that, it's a gap and go, but you can see crude was trading around 55 on the open there Tuesday. So obviously they gave a lot of that back, and when it came down to our first buy level, we did get a bounce halfway back to the pivot. Then it kind of fought with that level for a portion of the day before trading sideways. Now on Wednesday, you can see we opened up in our high probability gap range, but the close was very close, so easy fill for the gap there. Came down into our pivot level, found support, and then just kind of consolidated there. But if you look down here below, we haven't really talked about this indicator much. This is called our NT delta, and it's, think of it as being positive above the 0 line, negative below the 0 line, and there's also some directionality contact. So sitting here above support, you're seeing positive delta, so that's showing underneath the price action there is an undercurrent to the market that is a little bullish, and ultimately that pivot level ended up holding, and they went up into our mid pivot. The tan line here still remained bullish, but you can see once they did break through and hold that level, the delta started selling off at the end of the day, and the market couldn't gain any more momentum to climb higher. Again, on Thursday, the market opened up in the high probability gap, went up to that first resistance area. You can see delta crossed below the 0 line, At the same time, price was fighting with that the backside of that first resistance area. Price came down through, bounced off the open, used that as resistance on the bounce, big negative delta, and you can see the price action followed down once delta started rotating back up to the upside, still negative here. The price action did gain a little bit of a bid. The pivot line was held, and once the delta got above the zero line, price action got above the pivot and moved back up into the resistance. And then Friday, again, gap fill, sideways rotational price action traded around that pivot both directions, used the open, used the prior day's close, stayed between the key buy, key sell level on that day. So quite a bit of activity for crude. Tuesday was a bang 'em up day, and then they made higher highs, higher lows the rest of the week. But our tools did well, our levels did well, and the gaps did well. So next we'll take a look at gold. Gold opened up in the high probability gap range 1, 2, 3 of the 4 days, and it filled 1, 2, 3 of the 4 days. So there was 3 signals, 3 fills. As far as we won't spend as much time on the rotations here, but again, you can just see how the price action respects these levels. And again, you can have these levels on your charts prior to the market open. We call it our NT pivot. And these are basically key support resistance levels. No matter what your trading style, no matter what system you use, knowing where the key support and key resistance is ideal. And so we had a good move in gold. Gold broke its downward sloping trend line back heading into the Christmas holiday break, and we've been making higher highs, higher lows ever since that point, except for Friday. You can see on Friday they did sell off and kind of bounce between their 2 levels here. But again, these key levels work on these 4 markets and did a nice job with support and resistance there. S&P. You can see this Tuesday we gapped up, opened outside of our high probability gap range, but they did manage to come back and fill the half gap, bounced off of the daily pivot. On Wednesday, opened up inside the high probability gap range. This is one of the days that the S&P was very strong on Wednesday, and it was not able to come down and fill its half gap. So that was a day where we did not fill our high probability gap. Again, that happens about 1 out of every 10 opportunities, and this was the one in this specific example. On Thursday, easy gap fill, easy half gap, pretty narrow range there, and you can see we're trading between our pivot levels. Friday, again, opened up basically on the close, easy fill. Caught a little bit of a bid, and again, just looking at the delta, we'll zoom into Friday here. If you look how price action came down, hit that support area, and delta was showing positive. So I was showing a tendency for that level to hold. So you'd be looking for opportunities to get long, and it pushed up through the pivot, still positive delta. And then once we got above this first resistance area, delta went negative for pretty much the balance of the day. So it just basically held the price action sideways and then didn't allow it to get above. Because of the negative delta, we weren't able to climb higher into our next zone of resistance. And finally, looking at the Dow. The Dow, similar price action on Tuesday, gap up, filled its full gap. Opened up inside its high probability gap range on Wednesday, filled its half gap, almost made the full gap fill. This is one where the ES did not make it, but the Dow did. Small range on Thursday and Friday. Again, good rotation between our levels throughout the week. The pivot levels on Thursday, we'll just talk about that one. You can see big negative delta. Price action came down off the pivot. Delta is still negative. Delta is still negative. We hit the second buy level. It did do a little bit of a pause on the first, hit the second buy level. You can see delta started turning around and became positive. They came back up, acted as resistance a little bit, but big positive delta. They were able to break through that level, use it as support, and then just a kind of a slow grind up the balance of the day. So anyway, that's it for our key levels for the week. Again, we 92% fill rate on our half gaps. Now let's go over and take a quick look at just the S&P breakdown Friday, just to kind of give you a feel for how the fractal tool works. Again, this is Friday. This is looking at the Ultimate Fractal tool, which is an auto signal tool that you can use. It works on any market, so whether you trade stocks, options, futures, it gives you short-term signals, and it's totally customizable, fractal in nature, can be used on multiple time frames. The way that we use it, we have it set on our alternate settings in the room, and if we look at the 9:30 open, which is the vertical white line on the left, we ended up having 4 trades on the day. 3 of the 4 were profitable. The one that was not profitable, you got a partial profit and then a stop out, so it ended up at -1 tick. So moving from the left side of the chart to the right, first signal here right after the open, we had a signal short, and that's this little white arrow you can see here. I put the circles on this chart just to make it easy for you to see, and I put the text comments on there, but the actual triple arrows you're seeing to the right, those are the signals that come on automatically with this indicator, and it also comes with a trailing stop. So 15 ticks on that first trade to the downside, 11 ticks on the second trade, again -1 tick on the third trade, and the trade of the day happened heading into the lunchtime dead zone. You can see we're kind of in a bit of a consolidation zone here. Got a signal long, the trailing stop didn't get knocked out until after about 12:45, and you ended up picking up 39 ticks. So total of 64 ticks on the S&P, which would be the equivalent of $800, not counting any slippage or commissions. But again, we have some tools that you can look at, or we have some videos if you want to learn more about this fractal tool, or if you'd like to take a trial to any of our products, we do offer that up. Just follow this video and you'll see links in the video. One, to sign up for our Rinko candle. That's the special candle we use here. We give you a free version of that, and we give you a little mini course on how to do the high probability gap range and calculates on your own. All we need is you to fill out the form and go to Newbie-Trader.com/NT-Rinko. We'll be glad to give you that free Rinko candle and a little guide on how to do the high probability gaps. And if you'd like to see some longer webinars and instructions on how to use these tools, how these auto signal tools work, especially for NinjaTrader 8, you can just go to Newbie-Trader.com/Ninja8. So thanks for your time. Hope you have a great weekend and look forward to seeing you next week in the room. And please send any questions you have to support@Newbie-Trader.com. Thanks, and make it a great day.